Good morning, good afternoon, and good evening. This is Property Management 101, and today we'll be discussing best practices for property managers when working with investors. If you've not already done so, please watch my disclosure video as well as my why I do this video. And if you found this video helpful and learned something new, please don't forget to like, subscribe, and turn on those notifications. This video will apply best for any property manager in the single family management side of the industry. But there are some concepts in this video that will apply to property managers as well in the multifamily side of the industry. Typically though, in the multifamily side of the industry, you have a lot more layers between investors and property managers. You may have asset managers, VPs, regionals that are typically the ones dealing with investors directly, while in single family management, the property manager is typically the one that deals with the investors directly. Stay tuned to the end of this video as I'll be providing a bonus tip as well. Now to the best practices for property managers working with investors. Number one, learn their strategy. It is going to be very important and vital in some cases that you know what that investor strategy is with that asset. Are they looking for cash flow? Are they looking as using this asset as a write-off from a tax perspective? Are they looking simply for appreciation of value over time? Are they using this asset for a long-term retirement plan? Are they a forced landlord where they don't necessarily want to rent this unit, but for financing reasons, that is their best avenue at this point? So that's another thing to be aware of. Are they looking to possibly refinance this asset in the near future and maybe re-pull out the money they invested in the asset? Are they looking to sell this asset in the near future? Learning their strategy will be very important as you make decisions on their behalf when it comes to things like work orders, setting rates, renewal offers, terms offered, etc. Number two best practice when working with investors, learn their hot topics. You really want to make sure you understand and know what their pain points are. What do they focus on when they review their owner statement? What are some things within their strategy that are important for you to know as far as how they like to operate? If their property was managed or they worked with a property manager prior, what are some things that they didn't like about what they experienced in the past with that property manager of things you could possibly change with working with them? Asking and finding out these questions early in the relationship will be really important as far as building that solid foundation with working with that investor. And last but not least, best practice when working with investors, set good expectations. Ensure that you've outlined and communicated everything that they need to know as an investor of how you operate as a property manager. For example, if there's a limit of how much you don't need approval for when working with work orders, make sure they're aware of that limit. Also, if it is above that limit and you require a certain amount of time for them to get back to you before that gives you full access to make a decision, make sure that they understand that time limit as well. And this is especially important if this is one of their pain points you find out prior to starting to working with them that they experienced in the past that they did not like. So that is something I'd maybe reassure them or go over with them multiple times just to be clear of what your expectation is and how you operate. There's a lot of examples I can go over with this one, but the more information that you can provide to them and the more you can reconfirm things that are more of their pain points, the stronger relationship that'll be. And for the bonus tip today, say no to bad matches. As a property manager, I know you want to often say yes to everyone that's interested in your services, and I understand you're going to want to grow your portfolio that you manage. But oftentimes I've seen operators have these big portfolios, and the assets that tend to struggle the most in their portfolios are the ones that are really that outside of their portfolio strategy and the standards that they have as a property manager. So some of the things you may want to find out before working with them is, what is their strategy with work orders? What kind of class or asset type do they have before you start to manage for them? What is the condition of the asset before you start to manage it? And what is their standard as far as how you keep that asset? If the investor is not in line with your standards or maybe puts you at risk because they're wanting to be heavily involved with managing the asset, that may be the type of business that you really want to pass on that may not be worth it in the long term. If you do have any questions about this video or any of my videos, feel free to comment. I'll be happy to address them for you. And hopefully you found this video helpful and learned something new. If so, please don't forget to like, subscribe, and turn on those notifications. Happy leasing!